Aware, rolling into the late morning on Wall Street, and the tone right now is cautiously optimistic with a bit of rotation under the surface. I'm Grant Mercer, this is Storm Stock Solutions, and let's bring some clarity to the chaos in today's markets. Since the last hour, the story that's really firmed up is small caps. According to reporting from MarketWatch, we're in the middle of a record rally for small cap stocks. But there's already a debate brewing about how sustainable that move is into 2026. The bull case being laid out is that fundamentals are finally improving for smaller companies, earnings and balance sheets looking a little healthier, which helps justify the recent surge. The catch is that this strength is happening against a backdrop of rising Treasury yields, and that historically has been a headwind for small caps because it raises borrowing costs and tightens financial conditions for exactly these more rate-sensitive names. So intraday, traders are leaning into the small cap momentum, but with one eye on the bond market. If yields keep grinding higher, this current rally could look more fragile than it appears on the surface. On the stock-specific side, CVS is a clear winner this hour. MarketWatch highlights that shares are rallying after CVS once again boosted its revenue and profit guidance for 2025 and laid out upbeat expectations for 2026. That's giving a lift to parts of healthcare and managed care. And it's the kind of move that reminds the market that large, diversified health names can still surprise positively on the earnings and outlook front, even late in the year. Intraday, that's where you're seeing some steady bid, defensive growth healthcare with clearer visibility into next year's numbers. We also got fresh labor data color. A new report flagged by MarketWatch shows job openings rebounding even as actual hiring doesn't move much in this song called Lull Hire, Low Fire, U.S. Economy. The rise in openings looks tied in part to temporary holiday work, but the broader takeaway for traders is that the labor market is cooling without cracking. That kind of soft landing narrative tends to support risk assets, equities like small caps in particular, because it suggests the economy is still ticking along without forcing the Fed into emergency moves in either direction. On the risk side, crypto remains a flashpoint. A MarketWatch piece digs into Bitcoin's sharp November sell-off and argues it was no accident, more a function of an always-on hype machine that pumps prices and then blames macro when the air comes out. For markets, the message is that crypto remains an area to handle with care. Sentiment-driven, headline-driven, and prone to sharp reversals. That matters because we've seen more crossover between crypto enthusiasm and high beta tech, or speculative growth stocks. When Bitcoin cracks, it can chill risk appetite more broadly, at least short-term. In the background, there are some interesting under-the-radar themes developing. One research note highlighted by MarketWatch pushes back on the main bearish arguments around artificial intelligence stocks, saying the skeptics might be underestimating how durable the AI spending cycle could be. That doesn't mean a straight line up for the group, but it explains why all linked names have been able to climb the wall of worry even through bouts of volatility. That's a story I'm watching to see if AI leadership reasserts itself later in the session. Another sleeper theme, shifting attitudes toward traditional retirement investing. MarketWatch points to survey data showing a lot of young men are skipping 401ks and instead banking heavily on Bitcoin for their future. That's not a call one way or another on crypto, but it does speak to generational differences in risk tolerance and could influence where flows go over time into digital assets versus conventional stock and bond funds. And there's also a piece on how couples can align on retirement money decisions. Again, not a trading catalyst, but it underscores how personal finance behavior shapes the long-term demand for financial assets. Looking into the next hour, I'll be watching three things: whether small caps can hold on to this leadership as yields move around, whether the CVS optimism spills over more broadly into healthcare, and how the crypto hangover continues to color risk, sentiment in tech and other high beta corners of the market. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,